Hello investors and future investors, welcome to the channel. In this video, I'm going to show you one stock and one strategy to help you generate weekly revenue and allow you to make $400 monthly. Now, if you're new to the channel, thanks for stopping by. For those of you on the weekly income team, welcome back. As you know, on this channel, we help you with option strategies that can give you consistent revenue and everything related to finance and investments. Welcome to Investment Gains. Let's jump right in. So for today's strategy, I'm going to show you how to make $400 monthly using one single stock. Now the stock we're going to use for today is going to be the Spider ETF, better known as SPY. Okay, so here we are on the SPY options chain. Now the first part of this strategy involves buying a leap or a long call. Call it what you may. So for this, we're going to go to buy and call. Now we need to select our strike date, which is going to be way out. Now for this video, I'm going to be using January 21st, 2022. Now, once you have gotten that, the second part of this, in order for this to be most effective, you're going to need to choose a strike date, which is below the current share price. So I'm going to go all the way down and I'm going to use the 410. Good. Now, before I go into the 410, I'm going to explain to you why I decided to use the 410. So, one, the amount of money I'm going to be paying to buy this call is going to be around $3,700. As you know, each option contract is multiplied by 100. So 37.06 multiplied by 100 is going to be $3,706. Good. So the second reason I'm going to be choosing this is by going down into the Greeks. Now, in order for you to be a very effective trader, it's better that you know and learn the Greeks. Now, I do have a video about the Greeks. I'm going to link it above. So first of all, the delta. The delta is 0.69, which I like. The reason I like it is because the delta is fine for me with the price I have to pay for it. Now, usually when I buy leaps, I like a delta of 0.75 or higher. However, you need to trade within your account. Secondly, it's going to be the volume. The volume for this one is 2, meaning of all the people that got into these contracts, only 2 of them have sold, which is extremely good. Okay, thirdly, the open interest. The open interest on this is almost 13,000, which means there's 13,000 interested parties in this 410 strike price. Now, hopefully you got all that. But don't worry, in the end, I'm going to go right through without explaining so you could see exactly how I got it done. So now from here, we hit continue. As you can see, it says a long call. It never says leaps option. So if you see long call, that's fine. You're doing it correctly. So as usual, you need to select the amount of contracts which you want, which is usually 1. So just go ahead and type in 1. Now, in order for you to buy this call, you're actually buying a call. Now, whenever you buy something, you need to pay for it. Now, the cost of this is going to be $3,706, like I said earlier. Now, with my size portfolio, which is 14,000, this is a bit high for me because it's going to represent 26% of my portfolio. Now, that is pretty risky to have a quarter of my portfolio in just one option. So this is not a very good buy. However, I'm just using this for the purposes of this video. Okay, so now you've bought your long call that expires January 21st, 2022, and for that you actually had to pay $3,706. So now you have this long call sitting in your portfolio. What are you going to do with it? So here's what you do. So we're going to go back over to the SPY options chain. So here we are on the SPY options chain once again. Now that we own a long call or a leaps option, now we're allowed to sell calls against it. Now, some brokers do not allow you to do this. Fortunately for us, Robinhood allows this type of trading. So now we're going to go over to sell and call, and we're going to choose our strike date. I'm going to use the strike date 1 week out of July 12th. Now, the reason why I choose July 12th is because when selling calls, when selling puts, time works in your favor. So it's better to have the strike date closest to you. So now we need to select our strike price, which is going to be above the share price to maximize profit. So now we're going to go ahead and we're going to choose the 438 strike price. Now for the 438 strike price, we're going to be receiving 0.35 or $35. So the question here is, why did I choose the 438? Well, if you're familiar with the channel, you're going to know I love to choose strike prices where the profitability of profit is high, 75% or higher. Now, the higher you go up, the less premium you make, but the safer it is. Now, the reverse of this is you can go ahead and choose lower strike prices. Now, the lower strike prices is going to give you a lot more higher premium. However, the risk is going to be higher. Now, so let's select the 438. We hit continue. Once again, we need to choose the amount of contract, and I always recommend 1. So we hit 1. Now, right away, there you have it. So I'm going to break down this trade for you. Now, right away, once you put through this trade and it's filled, you're going to receive a minimum credit of $35 into your Robinhood buying power. Now, this $35 is yours to keep no matter how this trade goes. That's just your money. You could do whatever you want with it. They're not going to take it back. So how do you make $400 with this? Well, it's quite simple. SPY is one of the few ETFs or stocks out there that allow you to trade 3 times per week. They do have 3 expiration dates weekly. So if you go here, you're going to see 12, 14, 16. That is all in 1 week. So since SPY has 3 expirations a week, this can be done 3 times per week for a minimum credit of $105 weekly. Now, $105 weekly, and you do this 4 times a week, which is going to equal to 1 month, you should be getting around $420. Hopefully my math is correct. And that's how simple it is to make $400 using 1 stop. Now, if you're new to trading, I think this is a good way for you to start off, because this takes patience and allows your portfolio to grow without much risk. Now, as you know, I am not a financial advisor. This is just a representation of what I do with my portfolio and how I was able to grow it from $300 to where it is now. So how do you win this trade? Well, if on July 12, SPY is trading at $38 or below, then you get to keep your minimum credit, and your leap option that you bought earlier, that gets released back to you. So you could do another trade the following week, the following month, whatever you want. The time you choose is all depends on you. So how do you lose this trade? With your leaps option or long call, you never want to lose it. The reason for this is pretty straightforward. The reason why you want to not lose it is because you're not going to be able to continue making weekly revenues. So you need to continue maintaining it as much as you can. So like I said, the one way you could lose with this trade is if on July 12th, once again, SPY is trading at $48 or higher. So you have a couple options that you can do. The first option you have is the ability to buy back your sell call. So all you need to do, just go ahead and buy call, look for it and buy it back. Now it's going to cost you a bit of money to buy it back. However, it's going to save you your $3,700 that you paid for your leaps. Here's a tip for you. In my personal experience, there was one time the share price actually went above my strike price and I was traveling, so I was not able to close it out. What Robinhood did is Robinhood took money out of my account and they bought back the call, which is very good because then I was able to keep my leaps. So just an extra tip for you. So this strategy of buying a long call and then selling calls against it is called the PMCC, or poor man's covered call. Now, I'm not sure why this strategy is not very popular, but this is one of the main strategies I use in order to grow my account exponentially. Now, once you have a long call or a leap, you receive investment gains in 2 ways. The first one is by selling weeklies. The second one is by the share price going up while you're holding it. Now, as you know, one option again is multiplied by 100 shares. So every time the price of SPY, once it goes up by $1, then your option contract is going to go up by $100. And also remember, there are risks, there are reverse to this. The reverse to this is that if SPY goes down $1, then your option contract also goes down $100. So when choosing your leaps or your long call, make sure you choose a stock that has a history of trending upwards. Now, all stocks do have pullback, but just go ahead and look for the overall upward trend and you should be pretty safe. Okay, so now we're going to go back to the SPY option chain and we're going to run through this. Okay, so here we are on the SPY options chain and we're going to run through this to show you the simplicity in it. So first of all, you need to buy a call and you need to choose your expiration date way out. Now, we're going to choose January 2022. Okay, the second part of this, you need to select a strike price that's going to be below the share price. Now for this, we're going to use the same one we used in the example, which is going to be 410. So we hit the 410. We hit continue, and right away you see we're going to have to pay $3,706 in order to buy this long call or leaps. Good. So now that you have the long call in your portfolio, how do you make weekly revenue? Okay, good. So once again, let's go back to the SPY options. So once again, we're in the SPY options chain, and now you have a long call in your portfolio or a leap. So now you're going to go over to sell call. You're going to choose your expiration date, which is going to be July 12th. And then you choose your strike price, which should be above your share price. Now for this, we're going to use the 438 strike price. We hit plus, we hit continue, and there you have it. So right away, we're going to receive $35 into our Robinhood buying power. Now, like I stated, SPY has 3 expiration dates weekly. So that means you could do this trade 3 times a week, which is going to be $35 multiplied by 3, which should give you $105. Now you do this 4 times a month, which should get $420. So on your investment of $3,700, you make $420 monthly. So now we have lots more strategies like this on this channel. So if you want to join the weekly income team, like and subscribe right now. Also, remember, hit the notification bell to get an alert whenever I post a video. But most importantly, if there's someone out there you know that can benefit from this video, feel free to share it with them. Let's help as many people as we can understand these options. When I started options, there was no one to help me out. So now I'm trying to help out as much people to make this as simple as possible. Thanks for watching, and remember to always take your investment gains.